Picture this: Brian Shannon scanning three screens at once, weekly, daily, and 30-minute charts dancing in perfect sync. The market's rhythm isn't random, it's a layered story told across timeframes. But here's the catch: knowing when to jump in without getting burned. That's the ultimate trader's edge. This is the moment Brian cracks the code of market structure and shows how to ride trends with precision, timing, and low risk. Let's start with how Brian teaches you to see the market's hidden blueprint. It's not about one chart, but how many fit together, exposing where price really wants to go. Brian recalls a swing trade on Alcoa in 2007. On the weekly chart, the stock was climbing steadily, a clear uptrend. Switching to the daily, he spotted a brief pullback, a perfect low-risk entry. That's the power of gazing up and down the timeframe ladder, a market whisper that turns into profit. Think of the market like an orchestra. The weekly chart is the deep bass line, steady and slow. The daily is the violins dancing with flair. The 30-minute charts add percussion and tempo changes. Each timeframe plays its role, creating a harmony you can listen to rather than guess at, revealing the market's true momentum. By syncing these layers, traders can enter trends not at the height of frenzy, but during calm, stable moments. This alignment shifts trading from gambling to strategic, maximizing winners while slashing risk, a transformation Shannon calls trend alignment. Suddenly, you're not chasing moves, you're stepping in ahead of them. Next, Brian dives into volume, the market's heartbeat, and how VWAP acts like a magnet for price, revealing hidden battle lines between buyers and sellers. In one vivid moment, Brian describes a trade where he used VWAP on a 30-minute chart to place his stop just below it. The stock bounced there twice, protecting capital while letting profits run. Think of VWAP as a moat that guards your castle. Steps inside are riskier, but standing outside is safer and smarter. When volume surges, it's like the crowd roaring at a concert. Everyone's energy shifts. Brian explains that sudden volume spikes often precede big price moves, signaling institutional players stepping in. Recognizing these surges is like catching the wave before it breaks, giving you the upper hand. Volume is the truth teller. If price rallies but volume fades, that trend's weakening, better to avoid or tighten stops. Conversely, rising volume with price means the trend is on solid ground. It's confidence on display, a trading green light if you know how to read it. Finally, Brian doesn't just hand you charts. He digs into that wild beast, the trader's emotions, and exposes Wall Street's sneaky traps designed to drain your account. Brian shares a story about a trader friend who, fueled by fear and greed, kept chasing losses deeper and deeper. He realized his biggest enemy wasn't the market, it was his reaction to it. By using multi-timeframe analysis to confirm entries and exits calmly, he broke free from this vicious cycle, turning emotion into disciplined action. He also shines a light on how Wall Street layers hidden fees, small commissions, spreads, and slippage that quietly bleed your trading account. It's like losing pennies at a time while focusing on bigger profits. Awareness here means choosing brokers and strategies wisely, preserving precious capital over the long haul. The ultimate shift Brian pushes is from reactive trading, a frantic game of catch-up, to a mindset built on anticipation. By combining market structure insights with volume and multiple timeframes, you learn to forecast price moves, entering trades before the herd even realizes what's happening. That's the edge you want. Remember Brian's three screens, the unfolding story across weekly, daily, and 30-minute charts. It's more than noise, it's market structure speaking. By layering timeframes, watching volumes, whispers, and mastering your psychology, you step from random guesswork into a strategic game. Try this. Next time you trade, first check if your entry aligns across at least two timeframes. That's your low-risk and high-profit setup in action. Subscribe for more book summaries like this one.